From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for September 20th, 2017. Today we're going to be taking a look at the USDCAD, the US dollar, versus the Canadian dollar for today's trade analysis. We're starting here on the daily time frame. It's not too hard to see that this currency pair has been in a downtrend for quite some time. We're going all the way back to April and May of this year, where we saw the market start to fall from all the way up here into the 1.3700s, all the way down here, bottoming out into the 1.2100 level at the very bottom of the chart. Over the past few days, about a week or so, we have seen a little bit of a rebound, a little bit of a pullback within the overall downtrend. Now, we've seen that before within the downtrend. We have one area here between the blue box and the black circle where it pulled back close to the trend line and then began to fall back down again. But even if you go up here towards the top of the trend, you see this congestion period here, or even a little bit further, a little bit of a congestion period here. So we've seen periods where the market has rallied, tried to change the trend back to an uptrend, and the market falls off again. So I think we're looking at the very similar situation now. Now, of course, it's important to note that at 2 p.m. today, we get some FOMC information that could change everything for the US dollar. If it's significantly positive and hawkish for the US dollar, we could see this currency pair take a run back higher again. If it's very cautious and dovish for the US dollar, we look for this to continue the downtrend and pressure back lower again. We also are keeping an eye on oil. Oil has been on the rise for the past few days. With that, we could see another pressure for the dollar CAD to be pressuring lower. Rising oil, falling USDCAD often. Not all the time, but often. So those are a couple of things that we're looking at. Of course, a few weeks ago, we saw a change of interest rates in Canada. We saw some pretty decent jobs data out of Canada. So all of that pressuring, fundamentally, I expected to go down. So what we've been waiting for in the trade room are rallies to resistance and opportunities to go short. We've been talking about the yellow zone as our first opportunity for that, and the orange zone for the secondary opportunity for it to find resistance closer to the trend line and fall back down. Zoom it in one more time, and you can see, taking Fibonacci from this last high right here, and I'm going to put a black X there, right there at the pink zone, that last high down to the lowest low, put the 382 Fibonacci retracement level at 1.2291. That's right in the middle of our yellow zone. We can see that that's where the market has capped over the past 2 days, now the third day capping right there around that 382. So all that tells me is that the market's having a difficult time breaking through that yellow shaded area, the 382 fib, within the overall downtrend, and the possibility of taking another run at the blue zone at the very bottom of the trend, and possibly even breaking through the blue zone and a new low to be made. So we've been watching for an opportunity to go short around the yellow shaded area. 1.2260, 1.2320 is that entire yellow shaded area. Now, yesterday we saw a little bit of congestion there. Take it down to the 4-hour time frame, a little bit of consolidation or congestion as the market just hesitated in here. So what we discussed yesterday was looking for a breakout of the yellow zone. We wanted to either break under the yellow zone for a turn to go lower, or above the yellow zone for some maybe pullback up to the orange shaded area up here at the very top of the chart in the longer term trend line. Something else to consider today is that our Forex Black Book trend bar, the trend indicator at the very bottom, is red. That gives us a bearish expectation. Not only that, but if you look right here where I'm getting ready to draw out this little circle, we have a red arrow or red signal. So sell trend bar, sell arrow means that we're looking for this to go short again, the momentum shifting to go back down. Now, it's my expectation, what I'm looking for today is for it to stay underneath 2260. This candle to close, maybe another candle to open, and stay underneath 2260 before I actually make my entry. So I'm looking for the breakout of 2260, a breakout of this congestion, opportunity to go short in the direction of the longer term trend, targeting first the blue shaded area, and beyond there we could even see it all the way back down to the 1.2000 level, the green shaded area at the very bottom of the chart. So, but the first target, of course, will be the blue zone, then we'll need it to break underneath there if it's going to go lower. There's no reason to buy it right now. The trend is down. Fundamentally, I think this currency pair is still short. We're seeing oil trying to pressure higher today, so all of this means that we'd look for it to go down. You know, if you wanted to put a short-term trend line along here as well, that'll give you some confidence. A break of that continues that bearish pressure for the dollar CAD today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.